and see you back soon. Well, 230 points lower on the Nifty is what we have at this point in time. Jay Bala is now joining us of CashTheChaos.com. Jay, good afternoon. Good to have you with us here as always. I want to start with the rupee and the weakness that we are seeing. Very briefly, I don't know if you've seen the sharp appreciation that we have here. Chartically, how is it looking? And then we'll bring in our colleague Lata here to tell us what she's picking up as reasons behind, fundamentally the reasons behind the move that we're seeing. Go on, Jay.
Yeah, see, the rupee is on a depreciation path, and it's on a long-term depreciation path. And 80.5, it saw sometime in December, November. It's a ceiling for it, and it's not going to appreciate below beyond that. And we're going to probably see 87 in the next 4 to 6 months time frame. I had put out a tweet on the 30th of December that December is usually a very strong month for the rupee, but whenever the rupee has weakened during December, it leads to weakness for the rupee somewhere between 4 to 6 months down the line. So we have a rare exception that's happened for the rupee, where it has closed below its open in December. So, all pointers are towards weak rupee from a 4 to 6 months time frame.
Okay, that's the technical view on the rupee. 80.5 is a very strong level, and it's unlikely the rupee is going to appreciate to that level or beyond. But Lata is here to explain what we've seen in the markets today. Lata?
Well, pretty much a leads and lags and catching up for the currency is what dealers tell us. There has been a significant decline in both crude and in dollar index. Both these were the reasons why the rupee had fallen so much, with crude seminally falling below the $80 mark and the dollar index way away from the 114 that it was threatening. Some level of appreciation in the rupee was called for. One saw that in the Chinese yuan. The yuan, if you take it since October, October is an important month since some tops and bottoms were achieved. Since then, the yuan has appreciated, at least 4 to 5%, dealers say. So rupee had to catch up. Until now, whenever the rupee was appreciating, the Reserve Bank was buying and replenishing its reserves. Today, it has just stood by. So that's the third reason why the rupee has appreciated. Fundamentally, it had to appreciate a bit because the irritants of crude and dollar are much less now, but RBI was buying. Its absence today has led to this precipitous decline in the dollar and rise in the rupee. The moment they step in, it'll stop appreciating. And some people say that below the 82 mark, that is around 82.80, there was probably some buying which resembled central bank buying. If you don't stop it, it'll go even to 81.50. But around 81.70, 80, apparently there was some kind of dollar buying even by the central bank. So perhaps today's appreciation is done.
Okay, Lata, thank you very much for that. Let's continue our conversation back with Jay Bala of Cash the Chaos. Jay, your call on the markets now. I know you're broadly very negative. You see the possibility of the Nifty going back to June 2022 lows of 15,300 as well. But just talking about the near term, towards the end of December, we thought the markets are breaking down. The Nifty had gone down to levels of 17,774. But from there, it attempted a rebound to 18,250, which again, from there again, we've turned and, started moving downwards. Your thoughts on the near term now? What is it that the charts are telling you? And what about the Nifty Bank, which has started underperforming?
Yeah, thanks, Rima. See, the short term has two possibilities, and either we see a new low below the 17,774 that we saw on the 26th of December, or we see a bump up right away, protecting 17,790 and going up to somewhere close to 18,300, 18,400. But whatever be the case, all rallies are likely to get capped below 18,450 or thereabouts. Not exact number, just thereabouts. But the important thing to keep in mind is you need to have some protective puts from now to middle of February. In my opinion, we're going to see shock and awe, a start of shock and awe for the markets somewhere between now and middle of February. So the extreme short term is bit questionable. We don't know. We're going to get a new low below 17,774. Or it's going to go see a pre-budget rally in the form of bump up to 18,450. But whatever be the case, you need to keep some protective puts.
Okay, all right, Jay. So 18,450, that's the hurdle zone. As long as we trade below that, you're looking a little bit cautious on the Nifty. You know, one element that could swing the market a little bit in our favor is the weakness you've seen in crude oil prices. Now, we're hovering in that vicinity of around $80 odd, but we've come off sharply from the peak. Where do we head from here? Do you see a relief rally and then we see a correction? What are the broad levels you're looking at on Brent crude?
Yeah, I've been saying for the last 3 weeks or even slightly longer than that, Brent is going to see a very sharp decline from 87 or 90. We saw 87 last Tuesday when I spoke, and from there we've seen a 10% decline. And we're going to see further decline from here, and we're probably going to see Brent decline somewhere close to 60s first, then a bump up, then a 40s. But here's a very important point, Nigel. I've been saying this from 2010 on CNBC. Crude going down is not good for the equity markets. It might be good for India on an economic basis, but it's not good for the equity market. We've seen three episodes where the Brent has collapsed from high hundreds to mid 30s or sub 20s. Yet during those time, the markets didn't go up. The markets crashed along with crude because risk assets go up in tandem.
Point taken. Very different implications for both equities and what happens to the macros as well. Jay, so got the broad sense. Be cautious. It's looking a little volatile out there. One doesn't know the next jump could be. I mean, when I say jump, the next move could be a volatile move up or a volatile move down. Correct me if I'm interpreting you wrongly. So have some puts in the portfolio in any case. What else, Jay? What else can one do? I mean, where are you seeing opportunities on both sides?
Raising cash to maximum possible levels is quite important. And even if you're a long-term investor, in my opinion, we're going to get low-hanging fruits sometime in the middle of this year. And if you're going to not raise cash, you won't have opportunity to buy them. Holding portfolios as they are and seeing mark-to-mark decline is not a good sense, in my opinion. So I would say cash is very important here, and some investments towards precious metals. I would see that makes sense here. Because the dollar is slightly, weak. It could continue in a short-term correction or stay flat. That might give impetus to the precious metals. And so, some investment in precious metals might be advisable at this point.
What about the Nifty IT? The Nifty IT was down 2.5% in the morning. It managed a pretty smart recovery. The Nifty IT index is only down about 1% now. Thoughts on the index and any individual constituents? Do you have a trade?
See, on the IT names, I've been seeing the 28,000 level as important level on the index. On Friday, we saw a close below that level. That has actually slightly weakened the overall short-term bullishness that I had on the index. Among the frontline names, HCLTech is a relative showing relative stability, so it might continue to do that. But I like persistent from this point. But the important point here is if the markets were to go down below Friday's low, I think pretty much the September lows are going to be on challenge. So the markets might try to take out the September lows, and that might have a longer-term implication. The close below 28,000 on Friday is not a happy setup for me. I didn't like it, and I don't like it, and I would still be very cautious here. Except one or two names, you have to be very highly selective within the IT names here. Persistent and HCLTech ranks top on that.
Okay, all right. Jay, one of the stocks that surprised everyone last year was ITC. Suddenly we stopped talking about that. In fact, it's corrected 10% from the recent peak. What's your view on it?
See, I think ITC is undergoing a medium-term correction, and it might have further highs to come through in the long term. But it has potential to drop somewhere close to 280. But as long as it stays above 325, it's relatively safe. But we don't want to see the stock drop below 325. If it does that, it can drag the overall index, and the FMCG index might drop below important support at 43,600. Right now, the sector as such is still in a slightly strong position, but it's weakened a lot than it was a couple of months ago. As long as ITC stays above 325, I think the sector will stay above 43,600.
You know, Jay, you've seen what's happened with the US in the US rates market. There's a significant fall, right, which we saw last Friday. The front end of the yield curve in the US, the 2-year, etc., went down 20 basis points. That was a significant negation of earlier moves. The data is kind of supportive, at least the recent data, in terms of that perhaps inflation is now last year's problem. Although these are year-on-year effects, so it'll take time, but can happen quickly as well, because the rate of change is what matters. What's your sense, Jay? I mean, just connecting the dots.
See, Prashant, the bond markets is one of the biggest bubble that's popped. We had a 40-year bull run for the bond markets, and the yields have turned around and they are going above a 30-year trend line, 40-year trend line. And the recent move about 388, 89 bips in the short term is telling me or giving the information that we are headed for higher yields in the short term. But in my opinion, it's likely to protect 340 bips for the US 10-year. And even if it doesn't, the medium to long term is strongly up from say 18 to 24 months basis. I see the 10-year yields going somewhere between 565 bips to 700 bips. So in the short term, I think 340 will get protected, and we're probably going to see higher levels even in the short term. But I'm very bearish on the bond markets.
Jay, gold has been one of the best performing assets last year. Can you tell us, do you think it will continue with the outperformance? What would be the key levels?
Yeah, see, precious metals are inversely correlated to the dollar. And since we are seeing short-term weakness in the dollar, precious metals are likely to continue to deliver positive alpha at the moment. But we want to see gold keep up about 1785 on COMEX, and silver keep up about 22.25 on COMEX. If it does that, until we can see this tailwind continuing for precious metals. But in the short term, if they were to break that, it'll probably be in sync with the dollar going above 105.82 dollar index. If it does that, we got to take profits on the precious metals here.
All right, Jay, we'll leave it there. Thank you so much for joining us. It's always a pleasure having you with us here on CNBC TV 18. The market's up about 20 points from in the last 15 minutes or so, but down 200 points. 17,896 is where we are at. We'll take a quick commercial break here, but when we come back, we'll get you what Nimesh is picking up on D Street Chatter, conversations from dealing rooms, and of course our technical